Most beginners think the Forex market is random, but it's not. You just haven't been properly shown how to read it yet. In the last video, we covered Forex basics, and now we're going to be building on that. And I'm going to be showing you today how to read the market structure step by step. And by the end of this video, you'll be able to identify trends and actually understand what price is doing. So if you haven't already, get you a pen and paper and let's get into it. All right, what is market structure? Market structure is the way price moves on a chart, whether it's going up, down, or moving sideways based on the highs and lows it makes. Another word for highs and lows is support and resistance. And we went over that in the last video. So once you begin to associate the two, it will all begin to make sense. What is an uptrend? When the market keeps making higher highs and higher lows. So I have two examples here provided. So we're going to look at higher highs. This is when price breaks the previous high, creating a new high. So in the example I have here, that circled was the previous high. Price broke that structure and it created a new high. So that is the new higher high. Stay with me. It is going to make sense soon, and I will be showing a live example. Then we have higher lows. This is when the price pulls back, but it stays above the previous low. So as you see in the example I have here, we have the black circle on the recent low, and price pulled back where that yellow arrow is pointing, and it did not go past that previous low, but it closed slightly above it, creating a higher low. Now, this is forming an uptrend. An uptrend is when the market is creating higher highs and higher lows. I hope this part makes sense. Downtrend. The downtrend is the complete opposite. This is when the market creates lower lows and lower highs. So as you see in this example, a lower low is when the price breaks the previous low. So as you can see, there was a previous low that was broken with the black circle, and the yellow arrow is pointing to the new low. Why is that? Because it broke past where I have circled on that example. And if you continue to look, the three candles that you see coming down are forming a downtrend. So it continued to push down. Lower highs. This is when price pulls back, but it stays below the last high. So in this one, I have two examples to show. Look at where they are both circled. So price pulled back, but it still stayed below that last high. And as you can see where the yellow arrow is pointing, price pushed all the way down. This is how you know you have a downtrend. I don't know who you've been listening to, and I don't know what strategies you've been listening to. This does not need to be overcomplicated. But what it does need is consistency for you to be looking at the charts and actually practicing where to identify your highs, your lows, your higher highs, higher lows, lower lows, and so forth. It is important that you are putting your eyes on the chart and you are identifying these, because if you don't understand where the market is going, you are not going to have any idea how to even get in the market, and let alone know when the market has reversed and going the opposite way. Screenshot this, put asterisks by it, however way you need to, even put it on a sticky note and put it on your computer. An uptrend, you're starting with a low, going up to higher high, higher low, higher high, higher low, all-time high. Write this down and put it on your computer. This is going to be a very easy way for you to understand where to identify where price is going. Same here with downtrend. The most recent high, then it's going to go to a lower low. Then it's going to go to a lower low, pull back up and form a lower high. Then it's going to push all the way back past down that recent low, forming a lower low, lower high, low. I truly hope this is making sense. In order to learn how to trade, you have to understand market structure. And this is all market structure is. But speaking of structure, if you want something more structured to follow along in this series, I have put together a free guide called the Confident Trader Framework. And it breaks this down step by step, just so you're not only watching this series, but you're actually applying and executing. So you can download it in the description below. Let's move along. All right, now we are going to get into trend lines. This is going to put it all together. A trend line is a line that you draw to connect the lows in an uptrend and the highs in a downtrend. So here in this example is an uptrend line. This is a line that is drawn underpriced that connects higher lows. So if we go back, an uptrend is a bunch of higher highs and higher lows. Well, the trend line is going to put that together and actually show you where it is. So in this example, I'm not sure if my mouse will be able to see, but as you can see, there are 3 touch points where there are candlesticks touching the trend line created. Obviously, we see price continued up. And the main indicator here, so it's not overcomplicated, look at the uptrend line. Price has not broke below anywhere near that trend line. So that's another way to just simply identify when you're in an uptrend. If you create your trend line from the most recent low and extend it to where price is, and there is no candlesticks below that line, you are in an uptrend. You should see at least 3 to 4 touch points of double candlesticks touching that trend line. So you know you are in an uptrend. Downtrend line. This is where the line is drawn above the price that connects lower highs. Same thing, vice versa. We have a touch point here, and then it continues down. In this example, if you look at the downtrend line that I have drawn, you do not see price going above that trend line you can see like in the corner, like where the picture cut off, but that's a prime example of you knowing that maybe the structure has shifted. But I'm talking about where price currently was in that moment. Everything stayed below that line, under that line. So that's how you know you are in a downtrend, because the lower highs are connecting. Let's get into some live examples so you can see what this actually looks like on a chart. All right, so now we are going to put this all together so it makes sense. For starters, I am going to tell you where you go to even pull this chart up. You are going to make an account on TradingView.com. It is free of charge. Of course, there's paid plans, but if you are a beginner, you do not even have to worry about the paid plan option until you actually begin to build a strategy. So TradingView.com, as you can see, I'm currently on Euro USD. This was a currency pair that was explained in the basic Forex introduction video, that this is the best pair for beginners. So I'm currently on that pair on the 4-hour. So to start, we are going to take a look here. So as you can see, right here is where I am going to put, the very first thing you need to do is mark support and resistance. Now I'm going to keep this as simple as possible. So I'm going to mark the high, the ceiling, and I'm going to mark the floor, which is the recent low. Okay, so we're going to start with our high, and I'm going to make sure you see this in real time. So we're going to start with a high, then we're going to go lower low, lower high, price pull back, lower low, lower high, and price continued down. As you can see, this is a downtrend. So just looking at the two circles that we have right here. Oh gosh, I did that too big. Sorry. Look at that touch point and look at that touch point. Because price or a downtrend is nothing but lower highs being formed. So here we have two, and price continued to push down. And quite frankly, looking at how price is right now, I could tell you that it's probably going to continue to push. So I'm just going to put the third one there. So how does forming the trend line work? So now we're going to get our trend line tool, and we're going to start from the high, most recent high. And I'm just going to extend it down to where price is right now. And sometimes it is going to overlap. It doesn't have to be perfect. It just needs to be, just about in the area. So I just really just want you to see this in real time, how this looks. So our trend line has been formed. I'm going to put the trend line in yellow. As you can see, price is not going above. You don't see any price movement over here. There's no price movement in this area above this trend line. Why? Because it is currently in a downtrend. I hope this is making sense. And just so you could see this even better, I'm going to pull this pattern just so you can see exactly what this looks like. Now, this second line is this line right here that I'm pulling is very irrelevant. I just need you to see how the downtrend is formed, because not every time you're looking at the chart, you're going to see an exact way of a downtrend being formed. Sometimes, and that's the point of you needing to learn how to read the chart, because it's not always going to be like a perfect down line. Like, for example, this one shows a downtrend. I think it's kind of hard for me to explain it because I know what the chart looks like. But just know, as long as your trend line and your lower highs are being connected, you are perfectly fine. Now we're going to take a look at an example of an uptrend in the market. So for starters, always you're going to mark your your lows and highs, not higher high, higher lows. That can be confusing. So I just want to show you just so we keep it as simple as possible. So here, in order to know an uptrend, you are going to identify higher highs and higher lows. So we've identified our low. So we're going to take our trend, and I want you to see how this looks in real time. Price came up. I'm pretty sure there was trash action that day. It tried to pull back a little bit, shot back up again. Very little movement. We're just going to continue. Sorry, price continued, pulled back, continued. And we're going to move this out the way. I'm sorry, my tools are in the way. So based off what you see here, and I'm going to go ahead and pull the trend line from the low, and we're just going to go up to where price is right now because price is not falling below that area. So again, as you can see, we are in an uptrend. Why? Price is not falling anywhere in this area. Now, at some point, price may pull back, but price has not fallen below. So as you can see, we started low, and then we have a higher high, higher low. It shot all the way back, forming a new high, and then it came back very slightly, forming a low, shot back up, higher high, higher low, higher high, higher low, and so forth and so forth. So just so you can see again in real time how this looks, I wish I would have continued to do it because I feel like the arrow throws it off. But you get the gist. I truly hope you get the gist of what is being formed here. Now, this line that I'm drawing is irrelevant. I'm just drawing just so you could see how the uptrend is formed. So there was 3 touch points. How do I know? Because there was one here, there was one here, and there was one here, and that's 3. Forming the uptrend. Now, if price was to break well below that line, that trend line, then obviously you would know that there is a shift in market structure. I'm trying to keep it exactly how we just had it. So yeah, so now that you're seeing if price broke anywhere below this structure, so let's just say that this candle that has formed over here chooses to just shoot all the way down. Well, now we know that there is a break of structure. So now we need to think about getting in for potential buys. But with that being said, this would be nothing but calls being played, or excuse me, this would be nothing but buys being called into play. I truly hope this live example has made it make sense and that you're able to pull up TradingView and be able to start practicing how to form those higher highs and those higher lows and how to identify where the market is going. If you have found this video helpful, let me know in the comments below if this is starting to click. And if you're still confused, let me know that as well so I know in future videos how I am able to assist you. And if you want something even more structured to follow along, do not forget that you can download the Confident Trader framework in the description below. And in the next video, I will be breaking down zones and diving a little bit deeper into support and resistance so you can start actually identifying where the market reacts. And that is where everything will truly start to come together. I truly hope this video has helped you, and I hope to see you in the next session. Until next time, God bless.